Hi guys. So in this series of lessons, I will be discussing various basic concepts of accounting that are relevant to all the students who are studying accountancy, be it CA, ACCA, CPA, wherever you are studying. Now, today, my topic of discussion is three golden rules of accounting. Out of that, I will discuss one today, real account. So, without wasting any further time, let me get to the topic. Now, there are three golden rules of accounting, and these are the basis on the which organizations pass journal entries in their books. So, you have to understand how these rules operate. The first, which I will be discussing today, is real account. For real account, the golden rule says debit what comes in, credit what goes out. In theory, what does a real account means? In theory, accountants say that everything that is there in the balance sheet is a real account. So that means assets, liabilities, and even equity. Because their balances are not closed at the end of the accounting year. This year's closing balance becomes the next year opening balance. And so in theory, they say all are real account, all the assets, all liability, and even stockholders' equity. But here we are going to discuss that what does the golden rule actually apply to? Because see, the heading of debtors is a real account, but in substance, it is a personal account since we are going to receive the money from various different debtors. So it's called a representative personal account. We will look into it. In the next lesson, I will be discussing nominal and then personal accounts. So real account is something where the balance is not closed at the end of the financial year. And so everything that is included in the balance sheet is basically in its characteristics a real account. But what does this journal entry or this golden rule applies to debit what comes in, credit what goes out? Generally, it applies to your tangible fixed assets. It applies to your intangible fixed assets. So all categories of fixed assets are there. Now, intangible fixed assets, there are two categories, right? One is a depreciable fixed asset, one that gets depreciated and can be replaced fully. Once it's fully depreciated, that it is no longer going to be viable or in use for the company. For example, machinery, furniture, building, land is a real asset, but it's not a depreciable asset. Only one of the tangible assets which is not depreciable at all. Then it is computers and other equipments. Intangible fixed assets, see, since 1990s, intangible assets has become a big source of income for the company because today IT services generally rule the market, be it Microsoft, be it Google, in India, be it TCS, Infosys, and Wipro. They do not have so much of tangible fixed assets as they have of intangible fixed assets. What are the categories of intangible fixed assets? They can be patent, copyright, trademark, goodwill. Another category of tangible fixed assets is wasting assets. What are wasting assets? These are natural resources. Once we fully utilize those resources, we cannot replenish them immediately. Then on the on the current asset side, you have cash and inventory that falls under this golden rule. Debit what comes in, credit what goes out. Apart from that, most of it, though its heading is real account, it will fall under different subheadings into personal account or representative personal account. No nominal account comes in the balance sheet. All nominal accounts are expenditures and losses that are in the profit and loss account or income statement, and at the end of the year, they are closed down and the balances are sent forward or carried forward to the balance sheet items. So real account will never include a nominal account at all, balance sheet items. So let's look at an example for a tangible fixed assets. Suppose A Limited purchased machinery. This is a tangible fixed asset from B Limited for $60,000 in cash. Now cash is also considered a real account because it's tangible and its balance gets carried forward. And it does not belongs to any person, it belongs to the company. So suppose A Limited purchased machinery from B Limited for $60,000 in cash. The golden rule says machinery is a tangible fixed asset, a real account. Cash, another real account. Debit what comes in. What has come into the business? Machinery. Debit the machinery. And credit what has gone out. What has gone out of the business? It is cash. So credit cash. Another one of the examples following is example 2, another tangible fixed assets. Furniture was purchased for $20,000 in cash. Remember, I keep on emphasizing it's cash because if it is on credit, it will not be anymore a real account. Because just like accounts receivable or debtors, accounts payable or creditors also have a heading of real account, but in the substance, it's a representative personal account. We will discuss that over the course of next several videos that I'm going to make. So furniture was purchased for $20,000 in cash. It will be furniture debit, cash credit. Debit what comes in, furniture, credit what goes out, cash. So if you look at it, real account is very much simple, or the golden rule is very much simple. Whenever you are passing an account entry, or if you are a qualified CA, ACCA, or if you are studying for it, you need to know that these are the most important characteristics or components that are included in the real account. First is the tangible fixed assets. Next, intangible fixed assets, be it patent, copyright, trademark, if you are purchasing them from outside, that is also included here. Cash and inventory. So these are the general 4 real components of real account. Wordplay, no? Real components of real account. Another very interesting thing to note about real account is that only in real account it is possible to have a journal where the debit is also real account, credit is also real account. With nominal account and with personal account, you will see they cannot have an entry of their own. Either nominal and personal, or personal and nominal, or real and personal, real and nominal. But they can't have debit also personal, credit also personal. It's virtually not possible. Same goes with that, debit also nominal, credit also nominal. It's not possible. So whenever you are observing another very interesting and easy way to identify whether you are passing this or following this golden rule, debit what comes in and credit what goes out, is to see that both are real accounts and no nominal or personal is involved. Nominal account you will easily identify. I will discuss that also in the next video, is that one that goes to the profit and loss account or income statement. And you will also identify personal account very easily because personal account relates to a person, be it a natural person like me and you who are living and watching this video, me who is preparing the video, be it artificial living persons like companies, Apple, HDFC Bank, Reliance. These are all artificial living persons. They're not natural persons. They don't breathe in oxygen or breathe out carbon dioxide, but they are artificial persons. And whenever a case is filed against Reliance, it is not filed against the managing director, but it is filed against the Reliance. So it's also artificial legal person. And then we will see a separate class of personal accounts, that representative personal accounts. So that's it for today. I hope you liked the video and understood it as well. So if you found this helpful, please mention it in the comments. So I will be encouraged and motivated to continue doing it. Thank you.